What's up everybody, it's Dex and welcome back to our YouTube channel Between the Spreadsheet. Today we're talking about investing in the stock market. If you have thought about investing in the stock market, if you've wondered what are stocks, how do I get started, what's some very basic things to think about when you get started, this video will be very helpful to you. Overall, it's really a good time to invest in the stock market right now. You want to try to buy things in the stock market when it's cheaper, and in general everything is pretty cheap right now. So the very first thing, investing in the stock market. What is it? It's usually called common stock. A stock is actually a piece of equity that's offered by a public company that's traded. Their financial statements are available for you to look up online. You can go in and put your hard-earned money and invest into that company, hoping that your investment will grow and be worth more as you go along. Can you afford it? Just think about with the stock market, it's a little bit different than a bank account. My favorite R word is risk. There is some type of risk involved. Anytime you put your money into something that's dependent on how the economy is doing, you're putting your money in a specific company, which unfortunately could possibly go bankrupt one day. Take care of your debts, make sure you can take care of your household, your everyday expenses before you even think about putting any money into the stock market, because there is some risk involved. Now you've decided, maybe it's $50, maybe it's $100, maybe it's $1,000. I have some disposable income that I can risk in the stock market. I like to invest. Do I go ahead and start investing right now? I would say no, because I'm gonna advise you to take step 2, which is determine what type of investor you are. Let's think about 2 types of investors: a short-term investor and a long-term investor. First time I'm putting my money in the stock market, what do I really want to get out of it? Am I putting my money into a company that I think I'm not going to need it, I'm not going to touch it, I'm not going to look at it, I'm going to invest in this company, I'm going to leave my money, I'm going to leave it for my kids, my grandkids, etc. I'm going to believe in the time concept of money, which is essentially whatever it's worth today, at some point in the future, it has to be worth more. So I'm going to be a long-term investor. They'll pick companies that they feel are stable. They might also invest in things called mutual funds. You also have your pensions, your 401k. The second type of investor you have is what I like to consider myself as a short-term investor. The short-term investor is hedging, looking at the market, whether it's weekly, daily, trying to figure out how much money can I make on this specific investment, sell it right away, take a profit. You might buy a share, a stock that's $30, and you'll set the goal to say, if it ever makes it to $45, I'm gonna sell it. You have already made the decision that there's a value in looking for this $15. Now, the third type of investor, and this is what I really recommend, is a combination of both. We need to have some plans for our long-term future. How do you get more money to invest in the stock market? Short-term investing is a good way to do it, because each time that I want to buy more stock, I might not have to go into my bank account to do it. I made $15 and I can take that money and invest it a different way. It's 2020, so it's very easy to invest in the stock market. All that you have to do is download an app for a stockbroker. I personally would recommend Robinhood because they don't charge any commission fees. Unfortunately for me, with Ameritrade, I think it's like $7 every time I want to buy something. We have our money in our account. What company do I want? How much do I want to buy? I'm gonna give you a couple of very simple things that I do when I invest in a company. I look at past year performance. I want to see some type of stability. I want to see if I can limit the volatility that I've seen. How has that company done over the last year? Past year high. What's their high? It gives me some type of insight into, I would say, potential of this stock. You need to have some type of view on that company's financials. How are they actually doing? Would you want to invest your money in a company that doesn't have any money? But then I also just want to know, how much debt do they have? The fourth thing that I also consider is the industry type. What kind of industry is my company involved in? Because that gives you some type of understanding as to what their risks are. It also might give you some insight as to when it's time to invest. So if you think about it right now, everyone's at home. You think about companies like Netflix, you think about Amazon. What about cruise ships, airlines? Those companies are not doing so well. So you have to make that decision and say, what kind of industry am I investing in? And what's a realistic expectation? Make at least one personal investment. Have one stock in there that you're actually really interested in that company, you're really interested in that type of industry. It just makes the whole investing thing a little bit more meaningful and, to be honest, a little bit more fun. That's it for this week's video. Make sure you like and comment, subscribe to our channel, share the video, and I'll talk to you guys soon.